You mentioned synthetic digital currencies. Is that the one where basically the World Economic Forum, they want to program the currency so that you basically can only buy a certain amount of... They know how much meat you buy every year. They know how much you travel every year. Is that the programmable one?
So the World Economic Forum is only the figurehead. So just to explain to people that are listening, there is 1,000 corporations, including Brad Garlinghouse from Ripple, who sits on the board of the World Economic Forum. There are 1,000 corporate members. Now, Brad Garlinghouse has an incredibly powerful position because he's not only head of an incredibly powerful corporation that has amazing assets such as XRP, but he's also a threat and an asset, excuse the pun, to the central banks. So really, this central bank digital currency you're talking about is fully programmable. It is geo-fenced, geo-timed. It has a negative interest rate applied, and it expires. So if you don't spend your currency, you will lose it. They will give you a time frame, and you will have literally a timer on your currency, and you must spend it. And the reason for that, and people probably thinking, well, why is that a big deal? It's because if you've got to spend continually the dollars that you have in your commercial bank account, then you are under enormous pressure just to offload this currency. You cannot hold it. Transitioning to wealth assets, by the way, on the other side of this monetary reset from a CBDC, I mean, I don't know what the boys think of this, but in a programmable environment, I don't think it's going to be that possible. They could program your currency so that it could never be converted to any other type of media, right. And that means you're trapped. You're trapped in debt. And we're watching the European Central Bank. So if your listeners want to know where this goes, October 2025, the European Central Bank and the European Commission have formulated a strategy to start bringing in their new phase of the CBDC. This is why you're seeing in Australia these commercial banks running scared, because there is the high chance that...
If I can just take 20 seconds of your time, I apologise for interrupting this clip. If you'd like to support Turning Point Australia and what we're doing to help keep the lights on and keep the work going moving forward, please check out our website at tpaust.com.au. We've got a range of merchandise, whether it's the Make Australia Great Again hat, whether it's the other shirts that we have, or the educational maps that we have. Please go and support. If you don't want to buy any merch, that's fine. You can also support us by buying us a coffee and becoming a regular subscriber for as little as $4 a month. I'll let you guys get back to it. Thank you so much. People are going to be caught off guard here. They don't want you out of the system. They're trying to keep as many people, and I'll get their opinion on this, but the off-ramps are being shut down, and they want as many people in this system as possible. Because if you become wealthy, my view is if you are holding gold, silver, Bitcoin, these kinds of non-traditional assets on a market that's rotated, you could become immeasurably wealthy. And I'll say this, the amount of wealth that I'm talking about is unimaginable. The reason is because of the power of something like Bitcoin and the untapped power of gold. Gold isn't doing much at the moment. If you have a look at the spot markets, it's trading in something called the range. We've been watching it for a while. It's skyrocketed. I mean, gold has up about
25% in the last 7 months, up 40% last year. So it is trucking very strongly here. But like Tim says, it's been at around that $5,100, $200 per ounce Aussie level for the last few months. Silver and platinum have been the really big runners over the last few months, not gold. Now, I think gold will run again soon. But yeah, you're absolutely right, Timmy. It's been trading in a range for a little while.
But my point is, it's as a reserve asset or as an asset, a wealth asset, once the market flips over to zero value in CBDC, once it flicks there, gold doesn't have a price anymore. That gold is just a value system. It means that there is no way to calculate the value of gold. In other words, you are immeasurably wealthy by design, but by the fact that you're simply holding, or by default, but by the fact that you're holding these assets. Bitcoin, and again, I'm not going to talk about it because it's in my new book, 2033, The Great Reset. It's in my new book. There's a chapter called Hyper-Bitcoinization, and I'd love to hear Bish's view on this. And this is a word that no one knows. Like, none of the people listening to this know this word, hyper-Bitcoinization, but I wrote a chapter on it because it has something extraordinary. Without giving it to, I will say, Bish, if you do talk about hyper-Bitcoinization, what I don't want to do is give away this chapter in the book. It's too valuable to give away. People need to go and get the book to understand what Bitcoin and why Bitcoin has been put into the reserves of the US Treasury. They are looking to increase their reserves to 1 million Bitcoin by 2030, which is to coincide with the UN's Agenda 2030. I think we have
honestly, if we have 3 to 5 years of the currency, the fiat currency left, I think that'd be an exaggeration. I think this currency will be well and truly gone by the year 2030. I don't think central banks will be trading on traditional currencies because the ECB and the Bank of England are moving in October. We already know that. And the European Commission is, under Ursula von der Leyen, is looking to mobilise people's funds. 10 trillion euro private euro funds are looking at being mobilised. What that means is a very high chance that the European Commission, which is the administrative arm of the European Union, are going to literally take your funds, just like Roosevelt did in 1933, March 6. They shut the commercial banks down and they said, that's the end of it. It's too risky for us to leave the commercial banks open anymore. The European Central Bank is highly likely, that by their own admission, not the European Central Bank, the European Commission, of mobilising consumer funds. That means they're going to take your pension funds and pretty much all your deposits are gone. Unused deposits was their exact words. Well, what else is a deposit if it's unused? Yeah. We've had this conversation before. And this is the backstory. This is what is going on.
Thank you so much for watching the show. I hope you enjoyed this particular clip. If you want to support this show and keep the lights on and support everything we're doing at Turning Point Australia, please head to tpaust.com.au, where we've got hats, we've got shirts, we've got maps. And if you don't want to buy any merch, that's perfectly fine. If you want to just buy maybe a cup of coffee a month, for as little as $4 a month, you can help us get a small long black to actually support the show and actually keep things going. Thank you guys so much for your support. Please remember to like, share, comment, and subscribe. I'll see you later.